Hey everyone, Jeff Dorman, CIO of Arca, back again for another edition of That's Our Two Satoshis Live, where we talk about everything happening in the digital assets market. And I'm joined this week by Byron Gilliam from Blockworks. Thanks for joining.
Thanks for having me on, Jeff.
Yeah, so a lot going on in the crypto markets this week. Certainly some mixed, I'd say some mixed results here with regard to how crypto is either holding up or not holding up versus the carnage in the equity market. I think I read this morning that this is the worst 3-day performance in the U.S. equity market since not including Black Monday in 1987. So pretty horrific move here in stocks. The Nasdaq now down over 22% over the last month, back to January 2024 level. So erased a year and a half. Actually, you can go back to 2021. Really, have just erased 3 years of equity growth here. Pretty nasty in the market. Byron, I guess my first question is, do you think Bitcoin is acting rationally here relative to what we're seeing in the currency debasements out of China, the 10-year, ripping down 50 to 60 basis points, then rising almost 28 basis points here in the last few days, and certainly how gold. I mean, what's your reaction to Bitcoin before we get into anything else?
Yeah, it's been interesting. I feel like the answer totally depends on which 3-day period you choose to take. Like there's a lot of data mining involved, I think. There was a decoupling narrative, and then for 2 days, and then for the next 2 days there was a recoupling narrative. And I think that's kind of instructive because everybody's talking about correlations, but correlations come and go. These are not fundamental building blocks of the universe, right? And the correlations themselves are based on our perceptions as investors. There's nothing mechanical about inflation going up and Bitcoin going down, or vice versa, or Nasdaq going down and Bitcoin also going down. So it's a lot of it is just perceptions, but then the perceptions can solidify into realities, right? Gold is at 2,000 years to cement the perception that it's a store of value. So now that perception just is reality. And I think what we're watching with Bitcoin is those perceptions are kind of being cemented in real time. And I think that the perception probably is going to grow that Bitcoin is genuinely a safe haven asset. And that's kind of a new opinion of mine. I've never really viewed it that way. But I think this tariff thing is so big now that people, for the first time, are genuinely questioning whether the U.S. dollar is the place to go to for safety, and whether treasuries really are the risk-free asset.
Well, let's stay on that for a minute, because I actually wrote this. I've written this many times, and I actually rewrote it again this last week in our public blog, which you can find on our website, ar.ca/blog. But I wrote, I've been saying this for 7 years now, that Bitcoin is not and never has been a market hedge, but it is a hedge for the lack of trust in local governments and banks. And that's why, we've seen every time, whether it's the March 2023 regional banking crisis, or the Canadian trucking standoff in 22, or the Cyprus banking crisis, or the 2019 Chinese tariffs, or anytime Argentina or Turkey currencies debase, there's a common theme, right? Bitcoin rises almost like a credit default swap whenever the risk of governments or banks increase. And let's be honest, that this market sell-off is largely due to a loss of trust in global governments, sparked, of course, by U.S. President Trump, and then made worse by the retaliation responses from other governments. But I think that's a real reason for Bitcoin's strength in the face of this. And I'll go back to even what you said about a safe haven. I think most people are confused about what a safe haven really is, right? A safe haven is not an asset that never goes down. A safe haven is an investment that is expected to retain or increase value during times of market turbulence, right? So, more literally, safe haven means a place of refuge or security. So U.S. Treasuries lose substantial value all the time, when rates rise, but nobody would argue that U.S. Treasuries aren't a safe haven. And I think the same thing is now true of Bitcoin, right? Just because the price rises and falls doesn't mean that it's not protecting you against over-leveraged governments and tyrannical governments and insane kind of government and bank decisions. So I would say that Bitcoin if you define what we're fleeing, in this case, fleeing the fear of governments and banks, Bitcoin is a flight to quality asset. It's just not a market hedge. And I think those are two different things.
Yeah, I think it's similar to 2022 when we had that huge spike in inflation. So, up until 2022, the narrative for Bitcoin was that it's a hedge against inflation. And then inflation happened and Bitcoin turned out to be negatively correlated to it. So that ruined that narrative. But I think it made people realize that Bitcoin is probably a hedge against hyperinflation. So it's not going to help you. If we have 6 months of inflation, that's
Right.
not going to help you. But if in the extreme case where we have a hyperinflation, it probably will help you. That's an unfalsifiable claim, obviously, because we haven't had a hyperinflation. So we'll just have to wait and see. But that was my takeaway.
Well, we haven't had it in the U.S., but I mean, obviously, plenty of other countries have had it, and Bitcoin has responded. Bitcoin has responded exactly as you said in hyperinflationary states in Argentina and Turkey, and at times in South Africa, et cetera. Right. So there have been certainly periods where you have seen that play out. I think you're right, though, that the correlations are certainly spurious. They're not long lasting. They change all the time. The narratives change all the time. I mean, we've talked about Bitcoin as being correlated to the Chinese yuan. We've talked about it being correlated to the dollar and to M2 supply and to gold and to equities. And, it changes all the time. As you said, you can kind of data mine whatever you want and create that relationship. What I think is especially interesting about right now is that there is definitely there's definitely a new trader base in Bitcoin than we've ever seen before, almost to the extent that it is now so easy to trade Bitcoin in any venue for most of the big macro funds, most of the big, even some long short equity funds, that you used to get to like the 4 p.m. Eastern, U.S. equity close, and it was a mad dash to cover positions and to kind of get on sides because you knew the after hours liquidity wasn't nearly as good. And if you didn't get it done by 4 o'clock, you were kind of in trouble and you were carrying overnight risk. To me, it looks like nobody cares about that anymore. And whatever risk they're left with, they're just hedging with Bitcoin after hours. We've seen that multiple times. I mean, take this last Sunday morning, for example. Bitcoin held up remarkably well on Thursday and Friday last week, even though stocks fell 10%, then did nothing Friday or Saturday. And then Sunday morning, it became pretty clear that we were going to have a pretty weak equity open. And Bitcoin became the tool of choice for everyone to trade on Sunday morning prior to equities opening up Sunday night. And then Bitcoin became pretty boring again once the equity market opened on Monday morning. And that's a dynamic that we haven't seen before. And we Arca being obviously a pretty large asset manager in the crypto market, we talk to counterparties all the time as well as other funds. I have never gotten less color from the big desks than ever before. I mean, I'm talking the big exchanges, the big OTC brokers, the guys who in theory are the ones who claim to be trading, billions of dollars of this stuff every day. They know nothing. They know absolutely nothing about what is happening in the market. And I think it's because it's mostly these large funds that are just doing algorithmic programmatic trading directly via exchanges and not actually doing kind of big OTC transactions or anything that we've seen in the past. So to me, this is interesting, right? That for whatever reason, as you said, correlations change, narratives change. For whatever reason, Bitcoin is being viewed, at least in the short term, as just like an extension of the equity market to kind of beta hedge risk. But to me, it's a bigger failure of the industry. Like there are over $600 trillion, well, less so now after their wipeout, but there's over $600 trillion invested across stocks, bonds, and real estate across the world. There's less than $10 trillion invested in like commodities and currencies and gold and things like that. Maybe a little more if you include central banks. But if you exclude central banks, there's almost nobody who cares about gold, currencies, and commodities from a real trading standpoint. So why this industry hitched its wagon to that fast money, macro focused traders instead of focusing on the handful of revenue producing, cash flow producing entities in crypto that would be much more easily understood and digested by traditional investors is beyond me. And I think it's a failure of the industry. Like, I don't think anybody really saw Bitcoin's future as just being, after hours NASDAQ. And that's what it's become. And I do blame a lot of the big participants for catering to that crowd when there's a whole nother universe of investors out there who invest in real estate bonds and stocks who know nothing about crypto because they assume it's just this cowboy trading currency world.
Yeah, I don't think it was it wasn't a deliberate choice on the part of the industry. I think the industry has been trying. Um, it's just failed to come up with any real revenue generating businesses that aren't like 90% downstream of meme coin trading, right? But there's been a huge amount of venture capital investing and a lot of developer activity, although I guess that's down as of recently. Um, so I think the industry has tried. I remember when I started writing about crypto about 4 years ago, and from memory, I think everybody viewed the Bitcoin dominance as kind of a down only trend. The assumption was that within a couple of years' time there was going to be all of these new things that were more productive and looked more like businesses, and tokens that looked more like equities, um, and just nothing has caught on really, with the exception of a few exchanges and Solana and stuff, and Jito and whatever, which really generate all of their revenue from meme coins, unfortunately.
Yeah, Solana.
I just don't. I don't think it was. I don't think it was a deliberate choice to go all in on store of value. I think it's just that nothing else has happened.
Yeah, I mean, Solana's an interesting one, as you said. It's sort of like the emperor has no clothes. It's like, it was everyone's favorite investment. It was very overcrowded. Everyone talked about the growth, but that as you said, that growth was entirely fueled by meme coins, and that's a hard business model. And what's interesting about that one too is that everyone knew that, right? It wasn't like it was a secret that all the trading was dominated by meme coins on the Solana network. But for most of the last 2 years, investors were willing to look past that and just say, well, if it works for meme coins, it will work for other things. And then post the Trump coin and Melania coin and Libra coin, everyone's like, nope, that's it. It was just meme coins and we hate it and everything goes down. But the other ones you mentioned, I think, are different. Like you said, there hasn't been that many revenue producing kind of, tokens that look like equity. I would argue there have been a couple. And this is, again, why I just think it's so weird that more industry participants aren't focused on these. I look at Binance, right? BNB coin was trading at like $1 back in 2019. It's at 550 and peaked at 700. I mean, that's as much of a tokenized equity as there ever is, right? I mean, the company is a private company. It has obviously real equity value as well, but they've found a way through, distributing a portion of their revenues to the token holders, as well as making the token a utility on their network, to have real value. Bitfinex's Leo token is the same thing. I mean, the Leo token is the best performing token in crypto history. It came at $1. It's trading at $9 at all-time highs. And has very low volatility, probably the highest Sharpe ratio of any token in the business. And that's a pure amortizing token. I mean, but basically 5% of the supply disappears every year because of the buybacks they're doing. Hyperliquid, another one right now that almost nobody understands. I mean, Hyperliquid distributes 90% of their revenue. And this is the fastest growing company that we've seen since Binance. Hyperliquid gives 50% of the revenue essentially directly to buybacks of the token, and the other 50% goes into the HLP, or the pools that help run the business. This is a business that any regular investor could understand if they saw this. I mean, we spent an hour in an investment committee at Arca the other day just going through it. We're like, this is the simplest business ever, and at the current rate of revenue that Hyperliquid is generating as an exchange. Not that you ever annualize 1 day of revenue, but I mean, like today is a good example. Hyperliquid was the third highest revenue producing app in all of crypto, behind Tether and Circle. They would literally amortize the entire Hype token in 5 years at this point. The token would just disappear because they're creating so much revenue and buying back the token at such a fast pace. I should just disclosure Arca holds Hyperliquid in its funds, but I mean, it's less so to me that people don't know about this because there's no reason for them to know about it. It's more like, why are we as an industry not putting this stuff out there? DeFi and DePIN is so much easier for regular investors to understand than Bitcoin, Solana, and Ethereum. And to me, again, it is such a misalignment and almost just a misunderstanding of how investing works, that we have created this commodity currency-like narrative when nobody cares about that. So I don't know. I consider me a little frustrated that I left Wall Street in 2014 after a 14-year career, largely because after 2008, like I loved investing prior to 2008. And then after 2008, I remember just sitting there being like, my job is irrelevant. All that matters is what the Fed says tomorrow. And I was like, this is no fun. I don't want to be an investor that's just every month or every 6 weeks has to wait for the Fed to tell me which direction the market is going to go. So I left and went to fintech and then ultimately to crypto. And for the first 5 years of investing in crypto, it was really fun. There was all these unique and opportunities and interesting things that had no, correlation to the other markets, and nobody was even paying attention. But now to wake up and just see Bitcoin getting pushed around by macro traders and the rest of the market following suit, it's like, well, what are we doing? Like, there are so many more exciting things happening in this industry than just Bitcoin. Bitcoin's great. I'm not even dismissing Bitcoin. I just think the amount of energy and time and focus on just Bitcoin relative to these other things that are just much more easily understood and much more relevant to the traditional investor bases, it's just a crazy misalignment, and just complete missed opportunity in terms of where the focus should be.
Yeah, but I think, I mean, part of the problem, I think, is that the 3 or 4 things that you mentioned were all exchanges. So then, we're still in this self-referential circle of trading crypto for the sake of trading crypto, right?
Yeah.
Which is, which is okay. It's kind of like if the stock market was only, the only thing listed on stock markets were banks and exchanges, which it was in, like, when NYSE started in 1860 or whatever. Like, the only thing tradable were like 3 banks and treasuries. That was like it.
Yeah, but isn't that the point of a blockchain? Like, what is the point of a blockchain? The point of a blockchain is to move assets, right? So don't you want to invest in the ones that move the most assets, that being DeFi and stablecoins?
Yeah, but you'd like to have some assets that are, have value for something other than just another way to trade crypto, right? Like, you want some, just to extend the stock market analogy, you want some oil companies and you want some sneaker companies and, and whatever.
But that, to me, that was largely held back by regulation, right? Meaning, like, imagine if Disney issued a token tomorrow and Disney said, we're going to issue a token. It's going to be the third part of our capital stack. We have our equity, we have our bonds, and now we're going to have our token. Our equity is a claim on cash flows, our bonds are a claim on assets, and our token is going to be a claim on customer loyalty and growth or something like that, right? And all of a sudden that Disney token comes out and says, okay, we're going to issue a Disney token. 10% of top line revenues are going to be used to buy back the token so that there's a real growth trajectory that's aligned and aligned with the growth of the business. But we're also going to let you use the Disney token to pay for your Disney Plus membership. And we're also going to let you use it to get fast pass at the track or to get, early access to new IP or videos or things like that, right? I mean, there's all kinds of utility. I always break down crypto as being very simple, right? The crypto itself or the token itself is just a wrapper, and you can put anything inside of that wrapper. But for what you put inside that wrapper to have value, it has to either have financial value, meaning cash flows and revenues, or it has to have utility value, right? Meaning it's useful for something. The Disney token, for example, that I just described, would have both. It would have real financial value because you can, take top line revenue and use it to buy back tokens. It has utility value because of Disney Plus and fast pass at the parks and things like that. Like, to me, if you want to see in oil companies and healthcare companies and media companies, you don't need to create new ones. You need to take existing ones and have them issue a token. In the same way that, like, you didn't need a billion internet startups. You needed Walmart to use the internet. You needed JP Morgan to use the internet. You needed Domino's Pizza to use the internet, right? Like, this fallacy that we have to create all these new businesses with new developers in blockchain is just wrong, right? A blockchain is, by its definition, just meant to move assets, right? It is a ledger for moving assets. So that's great. Let's put some better assets on chain. Let's tokenize some stocks. Let's tokenize some bonds, and let's create some new ones, but from existing companies like a Netflix or a Starbucks or a Disney, or let's have Harvard coin and Yale coin and, have them replace donors and booster money. Let's have New York City token and, Paris token, and it gives you, discounts on the subways and maybe access to the parks for kids' birthdays, and maybe if there's a surplus, you get a little bit of a dividend or something, right? I mean, there's all these different types of assets that you can tuck into a crypto wrapper that would be better than the meme coins and the other nonsense that's there. So, like, I do have this hope and this vision still of what you're saying, that this industry can be more than just, exchanges that are just whipping crypto around, but it can still be, what are the most profitable businesses on a blockchain? It's always going to be the same answer. It's going to be whatever layer one blockchain handles the most transactions, which we don't even know what the answer to that is yet, because there hasn't been anything useful on a blockchain yet other than stablecoins. So maybe Tron and Ethereum is the answer, just because they handle the most stablecoin volume. But whatever layer one blockchain handles the most transactions, whatever DeFi applications enable the capital markets of those transactions, and whatever stablecoins are on those blockchains, that is going to be where the value accrues. And ultimately, you're going to have new, better assets on chain, which is, again, tokenized stocks, tokenized bonds, tokenized real estate, and new, issuance from your Disneys, your Netflixes, your Harvards, and your, New York Cities.
Yeah, I'm more interested in the latter thing that you mentioned. Like if it's just tokenized Disney shares, then I don't really care. That's just better bookkeeping. That's just trading on a blockchain instead of an DTCC. It doesn't really, not really exciting to me.
Yeah.
But when like the natively crypto assets are more interesting to me, and then the kind of hybrid assets that you're talking about, where it's not just equity, it's also you can get a discount on something or whatever, things that you can only do because it's on a blockchain. That's
Right.
that's what's more interesting to me. And
Yeah.
like you said, hopefully maybe we'll get some regulatory clarity that will let companies mess around with that.
Well, the only way to start that is to get investment bankers to understand this and to care about that kind of stuff. And like, for example, we were looking at the Circle IPO today, talking to the lead underwriter, and I'm just sitting kicking myself, being like, these are three 24-year-olds, barely passed their analyst program at JP Morgan, talking to us about the Circle IPO. And I'm like, there's got to be more interesting things you can do if you're going to focus on blockchain at JP Morgan. Like go pitch Delta on tokenizing their airline miles, or go pitch there's just so much. I used to be an investment banker. Like there's a lot of creative people at these banks, and why they haven't figured out that they can do underwriting and transactions in crypto, and to bring companies these unique opportunities. And maybe it really was just a fear of the regulatory, and maybe that's gone now. But it's I think there are so many different creative use cases for companies using a token and using blockchain. And then ultimately, I think, again, nobody's going to care about 90% of the crypto native companies that have a token with no utility and no fun and no financials. They're going to care about the ones that have real revenues and real cash flows, and they're going to care about the ones that have real usefulness. And again, I really, really think the industry needs to focus on that stuff, and less so on this sort of fast money macro, gold versus Bitcoin type future. But certainly not going to happen right now while while you have 7% intraday volatility in equities.
Yeah, this is not the week for it. No. Also not the week for Circle to be road showing an IPO.
Yeah, I think that's going to get delayed. Personally, I don't have any inside knowledge on that, but that's not coming anytime soon, in my opinion. All right, Byron, what else are you looking at, and how can people reach you and learn more about what Blockworks is doing and what you're working on?
You can reach me on the Blockworks website as my newsletter. It's a free newsletter. Just put your email in and try it out. Send me an email and I'll respond.
Yeah. Sounds good. And I'll put you on the spot real quick. Is there anything that you've been looking at in this market that really excites you? And I don't know, forgive me, I don't know exactly when you came into crypto, how long you've been doing this, but what's like one thing that you've been researching or writing about or interested in that is just actually feels like it could happen and is exciting in the blockchain world?
Oh God, that's a tough one. I'm coming up on 4 years now, and I'm still kind of waiting. It hasn't really, it hasn't. I got started in it, or got interested in it, because it's a permissionless capital market. And, at the time, like we said, it was basically just decentralized exchanges, which I thought were super cool. I used to be a market maker, and I was like, okay, this automated market maker thing is amazing. I never thought about that. And I was just super interested to see, like, okay, what are people going to do with this capital market that just anybody can participate in? And so far, it's been a lot of meme coins. So it's been a little disappointing so far, but I still think it's like super fun. Crypto is reinventing finance, and it's fun to makes you rethink everything from first principles. So I still really enjoy it, but I wouldn't say there's anything in particular that I would point at and say, like, this is the thing that's really going to make it all worthwhile.
I think it was Bill Gates who said that people tend to overestimate what can get done in a year or two and underestimate what can get done in 10. So if this is year 4 for you, hopefully all the things that we've seen thus far that look like they have potential will ultimately turn into more than just potential. The analogy I've been using, and this is maybe pretty dumb, but I like it, is imagine if you could see airplanes and you're like, wow, I can see what they do. They fly so fast. They do everything. It's amazing what airplanes can do. But the government, for whatever reason, told you that the only thing you could fly on an airplane was like teddy bears or something like that. And you'd be like, okay, there'd be a lot of speculative dollars coming into investing in airlines and airplanes because they could see the potential. But when you actually measured the usage of airplanes, it'd be quite low because nobody cares about transporting teddy bears. And it's like, it'd be a pretty binary investing environment, right? You're basically investing in these airplanes with the thought that one day the government will loosen the strings and that you will ultimately see all the commerce that we see today on airlines, right? I think that's where the crypto world is right now. It's that we have these great blockchains and DeFi protocols that work incredibly well, but the only thing available to trade on there is meme coins and stuff that nobody cares about. So if we ever actually open the doors to these other assets that we're talking about, tokenized stocks, tokenized bonds, tokenized real estate, Disney token, Harvard token, New York City token, whatever. If you ever actually open the floodgates, then all of the speculative investing dollars that have been coming in for years will actually be met with real transactions and real usage. And but it's a binary bet right now. And the markets are reflecting that with, massive volatility to the up and downside. So I think we will get there. I think it's taking longer than all of us had hoped. But, again, it's a binary bet that hopefully has upside that is meaningfully higher than the drawdowns that investors are being saddled with while they wait.
Let's hope so.
So, all right, Byron, great catching up with you as always. Come back anytime. Check them out on Blockworks on the website, and we'll be back next week with another That's Our Two Satoshis. Thanks, everybody.
Thanks, Jeff.